What's up, guys? It's Robson Hashida here, and tonight I'm going to talk about market phases. What are market phases? Market phases are the phases that happen when you follow the market. So, looking at charts, you can identify how the market really works. And this is something that not only applies for doesn't really only applies for Pvsra, but also applies for any other sorts of charts because that's how the market works. Let's take a look at price, for example. When I talk about price doesn't move on a straight line. Instead, price likes to move on waves. What do I mean by waves? So you see that price doesn't go up straight. Instead, it goes up and down, up and down, up and down. Then does a push up and then goes down and down again. Okay, so price likes to move into these ups and downs that we call them waves. All right. So what happens on the first phase? Let's look at the phases of the market. So the first phase that we have here on the bottom is called accumulation. All right. During the accumulation phase, we trade dumb money and smart money. Okay. So let me write to you guys. So notepad. Okay. So here I have my smart money. Okay. Smart money is money being traded by financial institutions, so institutional traders, so financial institutions, big traders, so professional traders like big names like Warren Buffett and people like that. Okay, and we call them market makers. Okay, market makers, and there is dumb money. Dumb money is the rest of us. So the the people who don't really know or understand the market. So I wish that both you and me are always place smart money. So I wish that both you and me always trade smart money instead of dumb money. Okay. So why is it? Because during this phase accumulation, there is a huge amount of volume for smart money orders and dumb one money orders. So smart money orders are being placed for long orders. Okay, so they're buying in this phase, expecting or even knowing the price will go up. Okay, and at the same time, dumb orders are being placed. So dumb money is being placed for short orders. Okay, so this time smart money will be placed for long orders. Okay, and the money, well, we call it the money, is being placed for short orders. So the smart money people or institutions, so let's call them the smart money group. The smart money group is placing long orders because they expect or they know the price will go up, and the dumb money group is placing short orders, expecting that price will go down. And then what happens? There is a markup. So price, instead of going down, price goes up all the way, boom, and stopped here. Then there is another accumulation phase. Why does it happen? Because in this reaccumulation phase, there's still some smart money people or institutions, okay, that are filling long orders, expecting that price will go even higher. And here at this stage, short orders are being filled with dumb money, expecting that price from here will go down. But then there is another markup and price goes up, all the way up. And then here there is phase called distribution. Okay, so we also call it like consolidation. So in this distribution phase, what happens? So price keeps like going up and down, up and down, up and down, and there's high volume. And you don't know why it's going up and down, up and down. You don't know why it's making this, and you get tired, you get bored. But this is when you have to pay attention. Why? Because once you get high volume, you know that there is a lot of smart money and dumb money being placed. So you know that huge volume means that the market makers are going to make their next move. All right. So you have to be able to identify, oh, this is a distribution phase. Okay. And whenever there is accumulation or distribution, you have high volume. Okay. So when you spot the high volume, what do you do? Okay. So here in the distribution phase, the market makers, so the smart money people, okay, are going to push prices down. So they're going to open a lot of short orders, okay? And the dumb group, the dumb money group, expect price will go up. So they are opening a lot of long orders. But then what happens? Price goes down, okay? So the smart money people and institutions, they win. So they make money. And the dumb money group loses money. And here what happens? Another redistribution. So there is another distribution, so we call it redistribution. So from here, the smart money group will place more short orders, okay, and the dumb money group will place long orders. But then price goes down, okay, and the smart money group wins even more money. And then there is here another accumulation, okay, phase, and things start all over again. Okay. So now is my question for you. Does it always happen like this? No, of course not. This is the ideal scenario, okay? But by looking at this, you can understand how the market really works. So it doesn't necessarily has to be 100% exactly like this, but more or less what you can see here, what you need to understand here is the phases of accumulation, distribution, okay, reaccumulation, redistribution, markup, and markdown, and how to anticipate the markup, how to anticipate the markdown, because this is when you make money. All right. So how do you make money? So you make money by anticipating when the market will make a markup, when there will be a huge bullish move. And the same, following the same analogy, after the distribution, okay, when you are here, you can place the order knowing, well, not knowing, but predicting that price will make a huge move, bearish move, and you place a short order, and eventually you make huge amounts of money. Okay. How, okay, so you can say, Robson, this is, I already understood, and this is getting like boring. Show me a real example. So here, okay, let's go to a real example. So I identified something really cool. It was on USD dollar CAD. Okay. So dollar CAD happened that it was really interesting to show to you guys, because it happened that, let me, okay, let me click this button. All right. So a very good example happened. Uh, where is it? As I explained to you that uh, what you can see here, okay? This is a very good example, because you see that price, actually not this one, but where's the, Oh, it was CAD yen. That's why I can't find it. So it was CAD yen. So let me show to you guys. CAD yen. Where's CAD yen? Okay, this one. Okay. Okay. This is a very good example, and I really like this example, so I want to explain to you guys. So you can see here. This is too big. Let's minimize. Okay. As per the explanation, price likes to accumulate on key levels. What are key levels? Key levels are numbers like, for example, like this. So you see this green line here? Okay. So this would be a key level because it's on the 85. Let me go a little bit up. Yeah. So can you see? Oops. Okay, here it says 85.499, but would be around 85.500. Okay, so if you haven't seen my other videos, you can look for or my other videos. But in my other videos, I explain about key levels. So key levels, and these are things like, okay. So this 85.500, we call it like half level. Okay, half level. So why? Because it's point something point five, so it's half. Okay. If it's like 85.000, we would call it whole number. Okay. But if you want to know more, just watch my past videos about key levels, and then you can understand everything about key levels. So for the sake of explanation, just learn this. Just learn that price likes to accumulate. Oops. Price likes to accumulate close to the key level. Okay, so what happened here is that we are experiencing here an accumulation phase. Why? Because we have a lot of volume. So you can see here, right? We have huge amount of volume that it's shown to you guys on the volume bar. So you see the volume bars here, okay? So that implies a lot of volume, a lot of trades being placed for both smart money and dumb money, okay? So when you see this, okay, you see that price, uh, how do we know price goes up and down for sure? How do we know? The answer is we never know because we don't have a crystal ball. But what we can tell by experience is that price likes to accumulate close to key levels, and the smart money group, okay, let's call them MMs, okay, so market makers. So the market makers like to place orders, few orders for long orders, okay, so long orders, so they're buying. They like to fill long orders a little bit just below, okay. So can you see this shadow? Okay, so this line, vertical line, we call the shadow of the candlestick. So you see here that a lot of orders were being placed because you have huge volume here. So smart money group are filling long orders. Okay. And how do I know that price will not go down? Because it failed to break this key level. Okay, so it doesn't break this key level, and after this, it goes all the way up and then breaks this 200 EMA and price goes up. So you know that they're filling long orders here. Okay, so they fill long orders and they go all the way here. Okay, and then what happens? They make a retracement. And then why this is also very good example. Why? Because here they broke it, but you have to pay attention because here they broke down, but there is no volume. Okay, so there is no volume, and then what happens is that it goes up and does another retrace, and then here what happens? You have volume. we have volume, but then what happens? It fails to break the key level. So it fails to break the 85.500. Why it fails to break? Because here is an evidence that market makers are going to move prices, are going to push prices up. Okay, so it doesn't break the key level, but you have huge volume, and then price breaks again the 200 EMA and starts to go up. So we know that the overall trend is still bullish. Okay, and this is a very good example of accumulation, and then another reaccumulation, and price goes up again. Okay, so here you can see that volume went, we have huge volume once again, and then from here, okay, oh, now you can see, right? So can you see this huge volume? So a lot of huge volume bars. So okay, and then is reaccumulation. Why? Why is reaccumulation? Because price failed to break the dragon down. Okay, so try to break dragon downwards, but failed. Instead, it started to go up again. So you can see, you can say that this is reaccumulation to go up again, and then price goes up again. Okay, and what would be the opposite? So tell me about the distribution. Okay, tell me about this phase, distribution. Distribution is when smart money are placing short orders and dumb money are placing long orders. So smart money are placing short orders. Why? Because they expect the price will go down. Okay, at the same time, the dumb money group will place long orders, expecting price will go up. Okay, but it goes down. Okay, how to see on this chart? How to see on this chart? We can't see. Why? Why you can't see? Because here the overall trend is up. So it's going up. Okay. So this is not a very good example to show you a short, okay, trend. Why? Because it doesn't exist here. The trend here is bullish. So there is no bearish trend. Okay. So let's move to AUD USD. So Australian dollar and US dollar. Okay, this would be a better example for distribution so that you can see the bearish trend. So you identify the bearish trend here. Okay, you can see that PA broke the dragon with a huge red candle. After that, there was a huge bearish move all the way down here. Okay, so from here all the way down here, and then so when does the distribution happen? So the distribution happen when you have, let me see, oh, much better here. Distribution, so you have a red candle that broke the 200 MA, and although it didn't break dragon, you can still see the bearish trend happening. And then here a retrace and another bearish move. Okay, so here I would call the distribution. Why? Because you can see this series of high volume here, and high volume here, and high volume here, and after that PA went down. Okay, so during this distribution period, distribution phase, okay, so dumb money group was filling long orders, expecting price will go up, and the market makers were filling short orders so that they can push prices down. All right, and this is a very good example, and I really wanted to make this video to you guys to explain how how to identify things. Oh, we just got an alert. But anyways, how to identify the phases of distribution and accumulation based on this chart. By the way, this chart is from readtheticker.com. Okay, so which from this diagram, which that beautifully explains to us about the phases of the market. So based on this very beautiful diagram, I went to the charts and explained to you guys how to identify all those phases. So if you guys have any questions, please please ask questions on the session below this video here, down here. And I wish you guys a wonderful week of trading. It's still Wednesday today, so we still have Wednesday, Thursday, and Friday. So I wish you guys a wonderful week. And bye. Oops, no, this one. Bye bye.